Hello everyone, this is Mulham from Mulham Trading. Today's video I'm gonna go over a problem or a mistake people make most of the time, and I've seen this on my Discord and my Twitter. They do the same mistake over and over, and then they get stopped out most of the time when there is only a simple trick or a simple solution they can apply, and they can avoid being stopped out most of the time. Okay, so what I'm gonna do in this video, I'm gonna go over what the mistake is, and then how to avoid it, 3 solutions, and then I'm gonna go over some few examples just to show you how this works. This is gonna be for the video. So I guarantee after watching this video, you'll be stopped out maybe half of the time, okay? 50% less. Before getting into the video, if you want to take your trading to the next level, then you need to backtest your strategy and make sure it's profitable over time, as well as testing and backtesting other strategies to see which one fits you the best. I personally use Trader Edge, which is one of the most efficient tools available in the market. You can backtest your strategy 3 times faster than traditional spreadsheets, and it's gonna show you all the statistics of the strategy immediately. Make sure you use the link in the description to get access to the platform. Okay, so the mistake is, imagine price coming into a point of interest. Okay, this way. Now, a point of interest can be order block, breaker block, fair value gap, rejection block, or it can also be a sweep. Okay, so let me just add this. Maybe a sweep also. I'll just put it here. So this is a sweep, okay? So a higher time frame sweep or a higher time frame POI. Now, what a lot of people will do is when they have this price going inside the POI, they're gonna wait for a change of character. Let's say price come here, change of character here, and they're gonna wait for a fair value gap to be filled. So they're gonna have their sell limit here. Whenever price come here, they will sell and it's gonna go down. Now, they'll always have their stop loss just above this point, this swing point. And that's the mistake, okay? As a lot of time, what's gonna happen is price will fill this fair value gap. It's gonna give another reaction, but it's gonna go up more inside the fair value gap or the point of interest, okay? Most of the time, there will be multiple sweeps, mostly 2 times. You see a sweep here and then maybe another sweep and it's gonna come down. Now, the mistake is having this tight stop loss inside this POI, okay? So as simple as this, we can't have our tight stop loss just above this swing point when we have a change of character, as price may just go deep and deep inside the point of interest, right? So you see this in the higher time frame, all of this noise in the higher time frame, let's assume this is our point of interest, right? This is our lower time frame. Now, this is our higher time frame. And this is what's gonna happen. You see this leg here is gonna be this way, maybe. And then inside the POI, the same POI, and we will have a reaction. That's all. You see all of this noise, it's just this on the higher time frame. That's where, if you are a professional trader, if you have patience to wait for the best model, then you'll be leaving all of this noise with a reward, okay, with a profit. A lot of people here get stopped out because they don't have patience or they don't have a proper risk management. So mostly the market comes inside, deeper inside the POI, just to shake the newbies and the beginners, to take them out, and then it's gonna go down. So you really want to be the one that's coming out of this zone with a profit, not the one who's being stopped out inside of this. So just keep it simple. So I really want you to focus and view this as a higher time frame. You see this point here, price comes down. I really want you to see it as simple as this. And then I'm gonna go over 3 ways to fix this. So what can you do in order not to be stopped out? So now into the first way to avoid this is, imagine we have our point of interest here, okay? POI, either, as I said, breaker block, fair value gap, anything. What I want to do is, whenever price is approaching and then I switch to the lower time frame inside of this and I see any any entry type, I would enter, but then let's say a fair value gap here, I would enter, but it's always gonna be this way. I would enter here, my stop loss is always gonna be above the point of interest. Or if there is a major swing, it's gonna be above that major swing, okay? And then I'll target any liquidity, okay? That's how you avoid being stopped out. I know sometimes you will say, okay, what if the point of interest is too big and then I enter at the beginning of the point of interest and my stop loss is too huge? That's why you need to watch the other ways. But if you have a small point of interest, then just to secure yourself, and that's mostly with a sweep. When you have a sweep, let's say you have a point of interest and then a major high here. When you have a sweep inside this POI, then you need to have your stop loss above, okay? Always stop loss above here, as price can go as deep as it wants inside this POI and then it's gonna go down. So you don't know exactly where to place your stop loss, so always have it at the top. So this is the first way, is simply have your stop loss above the point of interest, and then any entry type inside, enter stop loss above, and then any good reward to risk ratio, okay, any liquidity. Okay, now into the second solution, and this is one of my favorites, and I would suggest going with this one combined with the first one, okay? So it depends. If your POI is too big, then go with this one. If your point of interest is small, then you can go with the first one, okay? Always secure your point of interest stop loss above it. Okay, so in the second one, let's assume this is my point of interest, and then price is coming toward my point of interest, okay? Then I see this move. I would always wait for a change of character, okay? So let's say it happened here, and then change of character, and then I have a fair value gap here. I would not enter immediately from this fair value gap. I would wait. So let's say price goes above and then give me this reaction and then it goes above this. Now, if you had your stop loss here and you entered from this fair value gap, you were stopped out, but price is never out of this POI. You see, it's still inside this POI. So let's say price again come down and give you a change of character. Fair value gap here. You want to see this fair value gap working and giving you a reaction breaking this low here. This is now a failure swing, right? This is a failure swing, and this is also a first leg of distribution. Now this is your first leg, okay? Now you would want to wait for a breakout structure here. You want to see a momentum to the downside, a displacement, leaving a fair value gap. Now you'll enter from this fair value gap here. You will want to enter from the second leg. That's more confirmation, right? That's more confirmation. So you will enter from here, say this way. Now you can have your stop loss above this point, and if it's in the middle of the point of interest, you can still have it above this point, even if it's in the middle. If it's a small point of interest, then you can have it. Then you can have it above the point of interest just to be on the safe side, okay? And then you target any liquidity below. That's the best thing you can do inside those point of interest. You don't want to be stopped out when you are aiming for 10 RR, and then if you just adjust your stop loss just above, you'd save yourself, and it's gonna be, let's say, 5R, but you are in profit. You're not gonna lose 0.5% of your account, but you're gonna make, let's say, 2.5%. If you had 10 RR, you would lose 0.5% if the price just sweep above your stop loss. But then if you just adjust this to 5R with a higher stop loss, you would save yourself from losing that 0.5%, and you will make 2.5% instead, right? Which is 5R. So that's how I want you to think. I don't want you to just chase big RR, but I really want you to think how not to be stopped out, okay? Now this is our third method, and it's only a bonus, okay? I really want you to focus on the first and second method, but also this one as a bonus, okay? So let's assume that price was coming into your POI in this way, as a first wave, and then a second wave, and a third wave, okay? Now let's call this A, and let's call this B, and this is C, okay? What I really want to see before even entering here inside the POI, I really want to see A is bigger than B and B is bigger than C. And if I want to read it from here this way, it's gonna be C is smaller than B and B is smaller than A. What does that mean? That means that the momentum is going down, okay? So there is a sign of reversal. The momentum is going down as price is reaching a POI. That means price is losing strength and it's getting weaker. So mostly this POI will reject the price, right? Okay, so now we know this. What I want to look inside, so this bonus method is going to be based on strength and weakness, okay, of the candles. So now we determine the weakness or the strength of this. We know that it's getting weaker and weaker as it's approaching the POI. What I really want to see now is price giving me a high with a change of character. Okay, so we have a change of character here. Now let's assume this POI is on the 4 hour, okay? And then your entry is on the 5 minutes. I want you to have an intermediate or a time frame in between those time frames, so you determine the strength or the weakness of the candles. Okay, let's say it's 30 minutes. Okay, that's the one in between. I really want you to go inside here in the 30 minutes, and I want you to see this type of thing. Okay, this high here, or this move to the upside, I want you to see it this way. This is human price was going up, and it's a green candle. Okay, I'll have it here, a green candle, and then same thing, another green candle above, and it's getting smaller. Same thing as I've done here, okay? And then another green candle, and it's getting smaller also, this way. And then after that, I get one candle in here, but now this candle is not a green candle. It's gonna be a red or a bearish candle. I really want to see this candle here breaking the low of this and then leaving a fair value gap. When I see this, I can enter from, let's say there's another candle here, leaving a fair value gap. I would enter from here, and if it's a small point of interest, then I'll have my stop loss above the point of interest. If it's a big one, then I'll have my stop loss above this candle here, this weak candle. You see how if we call this A, this is B, and this is C. Now A similarly is bigger than B and bigger than C, right? And it's the same. C is smaller than B and B is smaller than A. So it's getting weaker. That's where when you see this break below this point on the 30 minutes, then you can switch back to the M5 and look for your fair value gap and enter from there. And you'll be more confident that mostly this high here will not be broken. But if it's a small point of interest, then it's better to have your stop loss just above here. So I'll just start with an example that price plays well and doesn't go deep inside the point of interest. And this doesn't happen always, okay? So this is just a good scenario where you will be kind of lucky that price did not go deep inside the point of interest, okay? So we have this order block here. We have a sweep and another sweep with a change of character, right? This is going to be my change of character here. Now price is coming into that POI. Now if I switch to the 1 minute and it's my entry time frame, I'll just wait for price to go inside. Now price goes inside this point of interest, right? My change of character would be right here. Price keeps going up. It's not here anymore. My change of character, I'll take it from here. Because you see, if I'm scalping the 1 minute based on the higher time frame, this would be my first sweep here. So after this sweep, my change of character is here. The second sweep, my change of character is becoming here instead. So now change of character is right here. And price closes below this level. Now, where's my entry point? It's gonna be this clear fair value gap, right? This clear fair value gap here. I would enter from here. or let's say 50. Let's say the beginning of this fair value gap, and we have our stop loss here, just to catch big RR, right? And where do I target? I'm not gonna go like to the 4-hour and I'll target uh, with this tight stop loss, but I'm gonna go. You see this 1, 2, 3. This is a low resistance, right? So I'll target this low here. This is 4 to 1, and price goes down, goes into the fair value gap. Okay, and goes to the take profit. So it goes to your take profit without stopping you. Okay, this is not a usual scenario. Most of the time, you'll see price mostly going above this and then give you another change of character inside. You see how big the point of interest when you go to the 1 minute? It's this big compared to what you're trading here. Now, if I go to the 4-hour, you will see this. And this doesn't happen always, okay? You will see this reaction. It doesn't happen always. Most of the time, what's going to happen is price will go deep inside the point of interest and come down. And it's going to stop a lot of people inside this point of interest. So this is an example on EU. And there are a lot of people in my Discord. They entered this trade and they got stopped out. And we're going to learn the lesson today, okay? And there is another lesson too that I'm going to go over. So basically in this price range, we are looking for a continuation to the downside unless price sweep below this, and then maybe we're going to go up, okay? But for now, we are expecting a continuation to the downside because there's nothing that says price will go up, okay? So we're looking for this fair value gap here. We got 2 points of interest. First one here, this fair value gap. Second one is this fair value gap, a small one here. Okay, those are the one that I'll be looking at. Now, if price goes above this without showing a reaction, then I'll go into this, okay? But let's see the nearest one first. Always look for the nearest POI, okay? So it goes above. This is the 4-hour time frame, and price goes inside. You see the touch here inside this fair value gap. Now, if I go to the 1 minute to look for an entry, or actually 3 minutes, because it looks cleaner, a clear rejection from this point of interest to the downside, giving me a change of character here and this fair value gap here. Okay, so I'd enter from here. Let's see. I'll enter from here and a stop loss just above here, and I'll target, let's say, that's what people do, okay? They're gonna target this low here. The price goes inside the fair value gap and they got stopped out. It goes more inside the POI. So now I'm gonna go and see what happened. It doesn't close above the POI. Goes down, 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 down. Inside the same fair value gap that I was looking at. But now the same people were looking for price to go below this point for a change of character to enter from a fair value gap here, right? But it doesn't close below. But what is this? From my last video, this is now an intermediate term low. Why? Because we have this fair value gap here that was filled and we see a reaction to the upside. Most likely price will create a failure swing here. It's not going to close above this. As you also can see that this is at the top of the point of interest. So basically if price goes above this point of interest, then our whole idea is invalid, right? So we have this intermediate term low now. If price closes below this point, then it's going to be our change of character. Or if price goes below this, this is also our change of character. Price doesn't close up below. Now it does close below. So now, let me just remove this. Now we can basically enter here. And this is going to be the same as our second leg distribution, right? So if I enter from here, just to be in the safe side, I'll enter from here. And instead of having my stop loss just above here, I'll take it all the way at this swing high, which is above the point of interest. And then I can target whatever. I can even go to the, let's say, I can go to the 30 minutes. Okay, let's go easy to the 30 minutes. And I can target, let's say, this low here, right? Or I can go more and target as we are expecting a continuation to the downside. I can target this low here. Then let's see. So it's going until here now, and there's a potential to go to the downside. But the mistake people made is they had their stop loss so tight inside this point of interest when the point of interest is actually so small. Like they could have their stop loss somewhere in here, just above the fair value gap, right? And it's not going to be touched. But they missed this whole movement just because they have their stop loss slightly here, So don't make this mistake. Into the last example, this is my last example. So this is AUD NZD. We have a liquidity here, okay? So we were anticipating price to go take this liquidity into this fair value gap, okay? That's the 4-hour time frame. And then what we're gonna do is look inside this point of interest on the lower time frame, let's say 1 minute or 5 minutes for an entry, okay? So price touches the point of interest. So in the 3 minutes, there's an entry, right? There is this change of character here. And price barely touched the POI and then goes down. And we have a clear fair value gap, which is this one. So I'd be expecting price to come inside this fair value gap and then go down. So, and my stop loss is going to be here if I'm not following the rules or the methods of this video. It's going to be just above here, right? Now let's see what price does. So price goes into the fair value gap, but shows no respect and goes and stopping me out here. So now I just want to show you how price keeps inducing people to enter. So you see this reaction here and price goes down. Now I would see the first reaction and I would mark it where people will think, oh, this is the high inside the point of interest. And you will see how it's taken multiple times, okay? So now a lot of people will say, okay, this is a sweep here. And now this is my high. So they will enter for any reason, or they will think, okay, price will go down now. And it goes down. But it goes up after that. You see the sweep again? There's a sweep. And they're going to say, okay, this is the final sweep now. This is my high. And they are out again. Anyone who entered here, they're out. Anyone who entered here for any reason, they're out. You see how price keep inducing people? You see how, okay, now this is a high and it's going to be taken. And you see how every time there's a high, it's taken. You see inside this point of interest. So now we have this high and we have this high. You see now price is starting to go out of the point of interest. Now if I switch, you see how many times they are being out this time. And then another time here, a lot of time. And now this is the last high and it's not being taken. If I switch to the 4-hour again, I would only see this. You see how price is clean inside this fair value gap? Goes up almost, I'm not sure if it's the 50%. Exactly at 50%, doesn't close about 50% of the fair value gap. And then start to go down. Now, if I go into the 4-hour, you'll see how price start going down from here. So if I was just entered from somewhere in here, and then always have my stop loss above the point of interest, let's say here, and then target maybe somewhere in here, that's 4-1, and you're chilling. So basically that's it. Have your stop loss above the point of interest, you're chilling, you're gonna be in profit. If you guys look into this, there are some traders on the lower time frame, they've been revenge trading and they're trying to catch the high, and maybe they got stopped out 3 times, 2 times, and they lost 1 to 2% of their portfolio just because of this, when they could simply adjust their lot size accordingly and then have their stop loss above the POI and they will not be stopped out. That's it for the video, guys. I hope you guys learned something new from this video. If you guys like the video, support me by hitting the like button and then subscribing to the channel. I really appreciate all of you guys and I wish you the best.